active military veterans, spouses, and supporters who are going to spend the next hour and a half or so with me learning the ins and outs, the myths and misconceptions, how to properly use this benefit. And I promise you, you're going to walk away with things that you did not know. There's a lot of myths and misconceptions about this particular benefit. And a little bit about me. My name is Jason Steyer. I am a loan officer. I have been in the mortgage industry for over 2 decades. I've dedicated my career to educating the men and women who serve this country, educating the real estate agents in the communities where you live, because honestly, the government does a very poor job of teaching you about this benefit, right? When you're on active duty, the government's job is to keep you mission ready, not financially ready. And it's the only benefit that you can use while on active duty. So, and a lot of people don't use it because they don't understand. They get talked out of it. They have all of these things, and we're going to walk through all of those things. I'm going to give you all the tools, lots of stories about this benefit that you earn due to your service to this country. If you're a surviving spouse, as well, and those are, to me personally, national treasures. I come from a military family. Okay, I'm a civilian. Both my grandfathers served in World War II. My dad's a Vietnam veteran, and my older brother, his first combat deployment was in Desert Shield in August of 1989, and he had multiple combat deployments after that. So I was raised in this environment, and my dad taught us about service at a very young age. He also taught us about work ethics, and we won't get into that, but about service to other people, especially those who choose to sign their name on that dotted line. So this benefit is extremely important to me. You can build wealth through it. You can, use it multiple times to build a rental portfolio if you're on active duty, or even if you're a veterans, multifamilies. We're going to go through all of that. You are going to get a litany of information, and I have a gift for you as well for attending today's seminar. And I hate that word, but it is what it is. So let's get into this now. So and what I want you to do is feel free to interact. Feel free to ask questions. Raise your hand, ask questions. We will get to you. I promise you all your questions will be answered. We'll also have some information at the end of the presentation where you can meet with me one-on-one to discuss any scenarios you want to go through, because they're not all the same. Okay. And one of the things that I always want to try to get across when we're doing this is just a sincere thank you. I thank you for answering the call to serve this country. I did not do that. That was not my path in life. And the 1% of this country who serve it are truly the 1%. So from the bottom of my heart, my family, in protecting my freedoms, and to sit here in front of you today and do this, I sincerely thank you and the sacrifice that you've made to make that happen, because it's not easy. And our goal for all of this is to ensure that the people who have defended this country have the chance to own a piece of it. Because let's face it, it's not an easy thing. Home ownership is a huge responsibility. And when you have additional roadblocks because of the loan type, it creates even more stress and headache, and honestly, a lot of other things that we won't want to talk about as far as mental issues. I've seen that and had these conversations throughout the years. So our goal here today is to empower you and the real estate agents that you choose to work with, if you're buying a house, or whether it's your first house or number 50, it doesn't really matter. This information goes across all of those timelines, and it's important that we take this information and apply it when we go to buy our next house. Because I have 3 pillars of this, and my goals for you today is, for me, is always the truth. That is you would think that would be a standard in the mortgage business, but it is not. And my goal is to tell you the truth. I'm going to talk about things that apply to you that do not apply to the company that I work for, because this is your benefit. It is not my job or my responsibility, honestly, to twist it to me. There are companies out there who do that. And you could probably name all of them because you probably bank with them, that they will pass things off as fact. But the best thing that we can do is educate ourselves. Always. We always be learning. I've been in this business a long time and I still learn things every day because I choose to surround myself with people that are a hell of a lot smarter than I am. And the other piece of that is we're going to advocate for your benefit. There is not one single veteran service organization in the country that's accredited that promotes and advocates for the VA home loan benefit. Now, I know there's some in the works, but there's still not one right now, as we said, that will do that. So it's up to us. It's up to us as an industry. It's up to me as a patriot. It's up to you to empower yourself to spend time doing things like this to educate yourself so you can truly understand how to use this benefit. Because the truth of the matter is that less than 15% of all eligible veterans have used their VA home loan benefit. Less than 15%. That is the real tragedy and pandemic, if you will, about all of this. Is the lack of financial education and access to this, because we honestly, as an industry, for so long have talked a whole lot of nonsense about this. Now, I will stipulate that, it is not my father's VA home loan benefit. Those are my Vietnam veterans out there. And even, during peacetime, during the 80s, your benefits changed a lot over the years. But it's still the best home loan on the planet, period, paragraph. And it'll never change. That I don't think anybody's going to ever change my mind as it relates to that. Okay? So what we're going to help you today is understanding the VA home loan. Okay? What it's about. The certain nuances, because you might have been told or have that the VA has a loan limit, right? So there's a law passed in 2020. It was the Blue Water Navy Vietnam Veterans Act that effectively removed the loan limit for veterans with full entitlement. So if you can qualify for the loan and it's a $2 million house, you can effectively buy that home with no down payment. Save your money if you have the assets. Make it put it in a different financial vehicle. And it's important because I still have conversations every day with veterans, active military, real estate agents across the country that still think that there's a loan limit. So this is why these classes are so important. This is why I get out in my communities and I travel the country educating real estate agents through real estate associations about this benefit, because we cannot keep kicking this can down the road. Okay. So there are actual loan limits. Okay. And those loan limits apply to you when you have a loan or you've had a foreclosure or a short sale, something that is tying up your entitlement. Okay. The standard loan limit in the year 2024 is $766,550 across 98% of the country. There are some high cost areas. Okay. Maryland, DC, San Diego, and that loan limit is about 1.1 million, just a little over that thing, 1.149. So if you have a loan, okay, and you want to go buy the next house, that's when the loan limit applies. We as loan officers have to do math to tell you, okay, based on your current home you have, and you want to keep that for a rental, you can buy another house in the same city, sometimes in the same neighborhood, and you could buy that house potentially with $0 down. So you can use your VA loan multiple times. And a lot of people, a lot of veterans, a lot of active military don't know that. They think, oh, it's a one and done scenario. I talked to a Vietnam veteran just this past week who thought his VA home loan benefit expired because it was part of the original Montgomery GI Bill, which had a 10-year expiration date. There is no expiration on your VA home loan. Okay, so that myth right out the window. Okay, so let's talk about eligibility. Eligibility to me is the basis of the VA home loan benefit. We can talk about income, credit, assets, all those things. But if the person you are dealing with, if the loan officer or the real estate agent or whoever that is, does not understand eligibility, you could get turned away. You could get put into an inferior loan type, such as FHA or conventional or USDA loans. because they don't understand eligibility, especially for our National Guard and reservists. And we'll talk about that a little bit too, because laws have changed there. Okay. Lots of National Guard. I think there's 400,000 National Guard in the United States. Okay. Lots of reservists. So, basics of eligibility. Okay. 90 days wartime. We are still officially at war. So 90 days on active duty. Okay. It's not 86. It's not 85 or 89. It's 90. Okay. So go through boot camp, go to AIT, get your first duty station. You got 90 days. You're going to be eligible. Okay. During peacetime, it's 181 days. Okay. For those that have served during peacetime back in the 80s and trying to get their eligibility sometimes can be difficult. Okay. Because of military records and people who don't have their DD-214s. And we'll give you some resources for that too. But 181 days in peacetime gives you the dates of those peacetime campaigns. Okay. Reservist and National Guard. Okay. I use this lovingly. But I use the phrase that the National Guard and the reservists are kind of like the redheaded stepchild when it comes to the VA home loan. They get left out because their service time, they're just like you and I. We have regular jobs. We serve there 1 week in a month, 2 weeks a year, but their service requirements are different. Okay. The one biggest thing is that you have to have an honorable discharge in the reserves or National Guard when you separate from service. Okay. If you're on a regular active duty, you don't have to have an honorable discharge. Okay. It can be general discharge. There are other discharges that qualify you. But if you are in the reserves or National Guards and you separate, it has to be honorable. Okay. If you serve 90 days under United States Code Title 10, which means you get called to federal active duty, 90 days will make you eligible. What we're going to need is probably a copy of your order showing the order time, or your DD-214 in the remarks section in the middle will have that in there. Okay. So we'll see that. What I see often is loan officers will say, you served in the Army National Guard. Okay. Give me your DD-214. Well, that DD-214 may be active duty for training. AIT, that doesn't count. Okay. And then you're going to be on this wild goose chase about chasing documents that don't even apply to you. Okay. You can do 6 years of creditable service. Okay. Do your 6 years in the Guard and Reserves, you get out creditable. Okay. Creditable, which means you drill all the things that you're supposed to do. You cannot go inactive on year 6 and qualify under that provision. 6 years creditable service. So that your point statement is going to tell us that. Okay. Form names, NGB 22s and 23s for my National Guard folks. Okay. We're going to have those to determine your eligibility. We got to determine character of discharge. We got to determine points. Okay. Very, very important. Now, National Guard guidelines changed here recently. So now what they're allowing is certain sections of Title 32 will allow you to qualify. Okay. So especially during the COVID times and the hurricanes and things like that, when National Guard get called up to serve. Well, they could be called up for 2 or 3 or 4 months at a time, away from their families, away from their jobs, all these things. So they changed the rules for that to allow certain sections under the 500 series of title, under Title 32, to qualify. Okay. So it's 30 days consecutive, 90 days accumulative. Okay. We will walk you through those things when we meet with you and have our consult. Okay. We ask those questions. All right. So other ways you can be eligible. You can be, if you did not do your 90 days, or you did not spend 24 months on active duty, then if you got discharged for a service-connected reason, you could still be eligible. Okay. Very important, because I have a guy the other day that served like 3 months, got hurt in basic training and like cracked vertebrae in his back. Well, he got service connected. Well, he's now eligible for the VA home loan benefit. Okay. Again, questions that we're going to ask, we're going to look at DDs, we're going to tell these stories. And the responsibility of a veteran of the military is to help tell us those stories, right? So we're going to ask the questions, get the stories to help better serve you. Okay. Spouses or prisoner of war missing in action. unmarried spouse of a veteran who died from a service-connected disability. So our surviving spouses. Very, very important that we take care of our surviving spouses. I've had the honor of helping quite a few through my career, and it is an honor to be able to help these Gold Star families. But they don't know about their benefit either. Okay, so dependent indemnity compensation for our surviving spouses, extremely important. They have to be receiving DIC in order to be eligible for the VA home loan. So we can walk you through that process. Okay, we're going to help you fill out the paperwork, help you do all those things, send it to Atlanta so they process that, and then we will help you through that. So extremely important for them. But one of the things that we're going to ask for, and this is, if you have it, you have the ability to pull this. We can pull it through our side of the lender's portal, but this is a certificate of eligibility. This tells us that you're eligible. If you do not have this piece of paper, you cannot get a VA home loan. That's simple. Okay. It tells us many things, entitlement codes. So that's the years that you serve. Entitlement code 10 is current. You've got Vietnam era, you've got Korean War, you've got World War II, surviving spouse. They all have their own entitlement code. It'll tell us that if you're exempt from paying the funding fee. Okay. It's extremely important that we talk through this, because I've seen many, many veterans and military go under contract without these. I'm not even sure why you would do that, because without this, it doesn't help us. Okay. We have to have this piece of paper, and you have to be able to read it. Okay. Because without that, we can't help you on your home ownership journey. We can't help you build financial wealth. Okay. So one of the things that I'm passionate about is teaching, especially young service members, if their plan is to spend 20 years in the military, and I know plans change, but if their plan at the day we're talking right now is to spend 20 years in the military, we're going to help you figure out that path. And part of that path is figuring out, what can I finance? What property types are allowed? We get so much nonsense from people across the country going, well, you can't do condos, or you can't do this, or you can't do that. Well, you know what? The VA has the most flexible loan types and the flexible property types, right? It's the lenders who have overlays, who put those overlays on the program, who pass them off as fact, who are doing you a disservice. So the truth of it is the VA has no restriction on property types. They just have restriction on how those properties have to be built. Okay, that's it. But as far as the basics, right? The basics of what we're talking about: single families, condominiums, multifamilies, duplexes, fourplexes, mobile homes. They can all be financed through the VA home loan. Okay. So if you're trying to buy a double wide on some land somewhere, yes, you can do it. Your lender may not, right? You got to ask the question. Your lender may not do that. You have to be able to ask the right questions. And this is why you being here is so important, because we're going to empower you with questions. So take good notes on this, because if you're not dealing with me, and I hope you are, but if you are not, I want you to ask the right questions and be served the right way. Because in cities like San Diego, condos are very popular, and they're probably the most, affordable, except if you live in the Wharf in San Diego. But they're the most. Some people will tell you that the condominium complex has to be VA approved. That's not typically the case. If it's not approved through the VA, the veteran can ask for a waiver if it's things that are not going to be harmful to you and why it can't be approved. We've done it many times. So I want you to think about this. If you're active duty, especially, right? You're in San Diego. You're going to buy a fourplex. You're going to have 3 of your Navy buddies living with you. Okay? You're renting all these things out. Maybe you have to buy it all together, which you can do, and split your entitlement 3 or 4 ways. And then when you leave, you rent that out. Now you've got part of your entitlement tied up, but you've also got passive income coming in, covering your payment. They are paying your loan for you to build equity in a property that you're no longer living in. Great. TSPs are great, but TSPs don't accomplish the same goal. So this is as much financial literacy as it is just buying a home. Okay. So I get asked the question, Does the property have to be perfect? The answer is no. The property does not have to be perfect. It has to be in good condition. Okay. It can't be the Chip and Joanna Gaines tear downer, rehab loan. Now there are VA rehab loans you can go do. Okay. They do have a rehabilitation product. It's a different set of restrictions and a different animal, but it does exist. Okay. But if you're buying a single family residence, it doesn't have to be perfect. What the VA looks at is safe, sound, sanitary. Okay. Is it safe? Is exposed wiring, broken glass, things that somebody could hurt themselves on. Sound, make sure that depending on what foundation it's on, it doesn't have to be on a slab. It can be on pier and beam and all kinds of other foundations as long as it's structurally sound. And then sanitary, it just can't be a turd. It can't be a dump. To me, it's fairly simple. You might get talked out of things because these real estate agents out there think, oh my God, this property has to be perfect for it to go VA. Not the case. Okay, this is where education comes in. This is where your team matters. The people you choose to work with, your real estate agent, your loan officer, even your escrow officer, the title company. If they don't understand how all this works, I promise you're going to have a hard time. I see it time and time again. Okay, especially when it comes to property condition. Just had a conversation yesterday. Guy says, well, we have to do this and they can do that. And all they wanted to do is really argue with us. And if that's what's going to happen, that's what's going to happen. I'm talking about factual data. We can go to the VA handbook, which is your VA home loan Bible for this, the 26-7. That's what we go through as a lender, right? That's where your VA home loan lives and breathes. Okay. Now, some of the other things, especially in some of these areas, they have to be completely permitted, right? All improvements have to have documentation. You can't have an add-on to a house that's not permitted. It could fall down around itself. Not good. Nobody wants that. Okay. Some of these rooms, the do-it-yourselfers, well, do-it-yourselfer turns into do-it-disaster most of the time. If you really know what you're doing. Okay. And, as we rewind just a little bit, I want to go back to, why the VA loan. Okay. Just let's talk about some basics of the VA loan. Why it's so important. You heard me say, I believe it's the best home loan on the planet. And I believe that it is. And we're going to talk about a few of the features for those of you that have never done a home loan or don't know anything about this VA home loan. I'm going to give you a few basic pointers on what that looks like. So, number one, no private mortgage insurance. Most loans have private mortgage insurance, like conventional. You put a 5% down conventional loan, you're going to have private mortgage insurance. It's a monthly charge, basically an insurance policy for the lender against default, plus property taxes, plus your regular homeowner's insurance and your principal and interest. VA loans do not have that feature. Okay. That is one of the best features about the loan. People will argue that, oh, well, I can do 20% down conventional, this and that, but you're tying 20% up of your assets in a home that may be making you money in the private sector. You could have it in a high interest bearing savings account drawing 4%. This is not financial advice. It's just my own personal experience with it. So you'll hear arguments. You'll hear pushback. And that's why, again, I'm glad you're here today, because now I'm arming you with some of the things you can push back on. Because honestly, not all loan officers are built the same. There's people out, the average loan officer closes about 3 to 4 VA loans a year. We close about 150. Okay. That is what we are good at. That is where we are at, because my job is to walk you through the benefits and talk about the loan myths, things like that, and be able to talk about it to lead that real estate agent to our side of the aisle. Okay. And one of the greatest features, especially in high interest rate environments, is the VA interest rate refinance reduction loan. Okay. It is exclusive to veterans. It is the easiest, most beneficial thing you will ever do relating to your VA home loan. Because when you buy now, let's say rates are a little higher, whenever rates drop, it's time for you to refinance. There's no appraisal. There's no income. There's no assets. There's literally nothing but updating title work, making sure we check the boxes for the guidelines on the URL is what we call it. You have to have in the property at least 6 months or 210 days. We have to drop your interest rate at least 0.5%. And you have to recoup your closing costs in 36 months outside of taxes and insurance, because that's part of your escrow. Okay. So we will walk you through those things as part of our follow-up plan and what we do for people, because a lot of times veterans just get closed and then you're going to get bombarded with all these frankly shitty lenders out there who are nothing but bottom dwellers who send you postcards and flyers saying rates are 2.5% again and all this nonsense. So trust in your relationships, people. If you do a loan with your loan officer and you had a great experience and they took care of you and you're satisfied, go through that same LO. Do not fall victim to all this nonsense that you're going to get in the mail. It's crazy. Okay? I see time after time people are taken advantage of. And one of the strengths of any good VA loan officer is being able to dispel VA loan myths. Okay? And they exist. The cognitive bias is unreal. That's what you face. It's not to deter you, it's to fire you up and make you excited about working with somebody who can basically tell these people exactly how it works. This is how it is. Your information is incorrect. And if you trust in me, I promise you, I will take you to the promised land. That's what we tell people every day. Okay? One of the biggest myths, and we kind of covered this a little bit in the beginning, is you can only have one VA loan at a time. It drives me crazy. Well, you can't use it again. Well, you used it before. Well, you had a foreclosure. You had a short sale. None of that stuff matters. It's all about entitlement. Okay? You can use it over and over and over again. If you're on active duty and traveling through your military career, you could buy houses at different duty stations and build a real estate portfolio. Get excited about that. If you're a veteran, you can still do the same thing. We have veterans that are downsizing, buying houses in the same neighborhood. There is no proximity rule when it comes to the VA loan like there is on FHA. It's great. But you'll get told that you can't do it. Again, we go back to the relationships. Okay? You're going to get told that the seller has to pay closing costs on your behalf, which is nonsense. They do not. If you're dealing with a really good lender who doesn't charge 1% origination, and there are some out there who do, and it rhymes with Schmetter and Schmunited, they do that, which triggers non-allowables. And oftentimes, those non-allowables get put on the seller's side, and the seller has to pay it. And here comes the myth. We're kicking this can down the road. If you're dealing with a lender who does not charge a 1% origination, that never comes into play. It's that simple. Okay? They think it's a requirement, and it is not. This is why, again, this is so important. You're going to hear that no down payment makes your offer weak. Just had this conversation not too long ago with somebody where I live buying a $1.7 million home with no down payment. And the agent was like, they got to put down a down payment. I'm like, why? Why do you feel that way? Well, just make my seller feel better. Okay, I got it. So let's talk about that, right? There's the business side of this. Okay. He's got all his assets tied in assets that are making him money, more than what this house is going to make him. Why should he pay tax penalties or other penalties to satisfy your seller? Would you do that? And then there's the emotional side. He's earned the right, due to his service to this country, from being away from his family for 5+ years on combat deployments, getting shot at, blown up, watching his friends die and come back with fewer limbs, and earn this benefit. And no down payment is a feature of this benefit. That trumps your seller's emotions. To me, it's that simple. Okay? But you're going to hear that. You got to be armed with the tools to be able to push back. Again, who you work with matters, right? We talk about, these building a force multiplier, as a military term. Again, loan officers, real estate agents, title people, inspectors, insurance agent, they all matter when it relates to this benefit. Okay. One of the other features that we talk about is the VA funding fee. Okay. This is a chart of the VA funding fee. The VA funding fee is a fee that is charged to you. It's financed into the loan. So it's a finance charge that basically supports this benefit. It keeps the politicians out of your pocket. FHA has reserve requirements from Congress and all this crap that you have to go through. VA doesn't have that. Why? Because it's self-sufficient. Why? Because the default rate is so low. The denial rate is so low. Most veterans make their house payments before they make anything else. It's your castle, right? It's where you live, where you protect your family. So while this fee, first time use, 2.5, 2.15, subsequent, so anything after that is 3.3%. It can get pricey. But part of what the seller can do for you is pay your funding fee is through a sales concession. Okay? That's a strategy, right? If you have a service-connected disability, you are exempt from the funding fee forever. Okay? Part of the Blue Water Navy Vietnam Veterans Act that we talked about in the beginning, Purple Heart exemptions. So those of you or have family members or yourself have a Purple Heart citation, you're exempt from the funding fee, still on active duty. It'll note that on your COE. Sometimes it doesn't. So please, I know that it's a little uncomfortable. Tell the loan officer that you have that. Make sure that it shows up. If it doesn't, they can get your citation, add it to that. So it from subsequent, times after that, it'll show up. Okay. But you can be exempt from your funding fee. And one of the great things as part of that bill in 2029, the funding fee will drop to 1.4%. Okay. That's amazing. There is quite a little coffer built by the VA in the funding fee because they don't have to pay a lot of claims. It's amazing. Okay. So it's fantastic for you. High five for those of you who have VA home loans and are continuing to pay and do the right thing. Okay. Part of what I love to do is educate active duty, educate realtors who serve active duty about finances, about taking this benefit and creating a financial plan with it. And going and sit in front of active duty, reservists, or National Guard and having this conversation is one of the greatest joys of my life, professionally and personally, frankly. And when I'm talking to them about setting themselves up for a positive financial future, if they're active duty, one of the first things that I ask them are, what are you doing with your BAH? What are you doing? Are you giving it back to a landlord? Right? Are you paying somebody else's mortgage and building wealth through equity for somebody else? Why would you not do that for yourself? I genuinely love to have that conversation. And I give this example. Average E5 BAH, $1,800. Think about this. Total BAH over 12 years. Over 20 years, 12 months in a year, over 20 years, you're paying $432,000 to somebody else's mortgage. We have to do better. Have to do better. They say, oh, it's too expensive. Okay, so let's say that house payment is $1,900 a month. So you exceed your BAH by $100 or even $200. Let's call it even $2,000. I like to work in round numbers. So you're going to take that and get nothing from it. You're not going to get any tax benefit because you can write off the property or the interest on the mortgage loan currently. You get no equity appreciation. Let's say the average house appreciates even 3% per year. You're buying a $250,000 house, $7,500 a year in equity appreciation. But I'm only going to be there for 3 years. Who cares? 7,500 times 3 is $22,000 in equity appreciation. Even if you have to pay a real estate agent to sell it, you're still net positive. So you have to do the math. Now, I'm going to be frank. There's some people out there who don't probably shouldn't own a house. They're not responsible enough to do it. It's just from a maturity level. But for most people on active duty, buying a home makes sense. I had a guy go to the Sergeant Major Academy at Fort Bliss. We're going to be there 12 months to go to the academy, bought a house. Why? Because he was going to turn around and rent it when he left. Because he sees the opportunity in that. It's a long-term investment strategy. Real estate is a long-term strategy, not short-term. There are short-term dividend investments. This is not one of them. Okay? One of the things that we talk about in this journey is making it easy on the families who are applying for these loans. We deal with families coming from all over the globe. Dealing with people in Germany, Turkey, you name it. And our job and part of what we do in the process that we built is to make this as easy as possible for you so you can focus on moving your family back to the United States if you're a contractor living abroad or you're on active duty or whatever that is, moving across the United States to say it's a CONUS assignment or whatever it is. Our job is to make this as easy as possible on you because both of my teammates are military spouses, and I have seen what it's like with kids and dogs and TMO and all these things. It's stressful as hell. I've seen people coming back from working as contractors or Air Force over in Germany, moving back to the United States. They haven't been here in 5 or 6 or 7 years. They don't even know what the U.S. looks like anymore. But we have set up processes for the application all the way through closing that are going to help you with the peace of mind that you need to get you where you want to go and without the least possible amount of stress. Can't take it all away. We're going to take what we can control off your plate, right? So how do we get started? The great thing about technology, and we live in the greatest access of information in the history of mankind. It's crazy. Blessing and curse. But we do. Okay? How do we get started? We get started by having a consult with a VA expert. And I don't like to use that word, but I am going to loan officer, whether that's me or someone else. Okay? Having that consultation, asking the right questions, talking about finances and those things. It's very important that we do that up front because not everybody's situation is the same. And the great thing about the VA home loan, as we stated before, is that the guidelines are like an amoeba, right? Chapter 4 of the handbook is credit, income, asset. And it doesn't cover every possible scenario like it would on FHA loans. It allows us as lenders to make determinations based on best practices and guidance to serve you because they know, the VA knows, while on active duty and separated, things happen. There's credit issues. You know, people sometimes when they transition out of the military don't have the greatest success. They have issues. There's credit blips. But they empower us as a lender to do that. And that's why it's so important that who you work with matters. And you're going to hear me say that ad nauseum. Okay. But how do we get started? 2 options to get started. Okay. Online or in person. Obviously, through the COVID nonsense and all those things, online was just about the only option. So we had to adapt and create all kinds of resources online. And I'm going to share some of those with you when we get to the end. Or in person. Come to the office, sit down, let's have a chat, let's meet for coffee, whatever it is, and talk through what it would look like for you to become a homeowner. I've talked to many active duty around many installations who don't have that ability, or they may have a financial readiness officer that tries to talk them out of using it, period. I had a JAG attorney one time talk a soldier out of using their home loan because he says they wasn't mature enough. And they had great credit, they had money, all these things. Don't do it. You're not ready. Yeah. So we had to undo that. But we did it by having those conversations. If we have to take Zoom meetings, obviously, if we're going to leverage technology, we're going to leverage Zoom too to do it. Okay. We're going to leverage that. So let's talk about the process a little bit, because I think the basics of that are very important to you can start to formulate in your mind what's going to be required. Okay. So what's required of you? The biggest thing that I can tell you, and hopefully you all exercise enough discipline to know that from your military careers, turn in all of your documentation. Okay. If we ask typically for a bank statement, we need a bank statement. If we ask for an LES, we need an LES. We have to determine repayment. And until you get us those things, we're not going to be able to give you a pre-approval. There are lenders out there who will issue pre-qualification letters just on a credit pull. Do not do that. Don't. Because think about it. Until they verify that you can pay them back in black and white in an LES or a pay stub or whatever that is, maybe you have an allotment on your pay stub. Maybe you're paying child support that they didn't ask about, or an alimony, or receiving it. They don't know any of that. It's dangerous, and it's honestly friggin' lazy. It's 100% lazy. So turn in your documentation. Okay. We will pull your certificate of eligibility through the loan application process. Once you apply, we go into WebLGY, input your social, year of birth, done, and Bob's your uncle. Okay. So we can do that for you. All the other things, if we need a copy of your DD-214, preferably your member 4 copy, because that has all the details on it, especially for my older veterans out there who may have served 90s, even 80s, even 70s if you're dealing with Vietnam guys. We need that, okay? Because we may have to go to the archives to get it, okay? But do yourself a favor and turn in all the documentation, okay? Part of the pre-approval process. So let's give you the basics of what that looks like. We are going to run your credit. Okay. We are going to do a hard or a soft pull. And a soft pull is one in which we pull your scores and your data. It just does not register as a hard inquiry at the bureau level. So let's talk about that for a second, why we do that. It has become increasingly popular for these low rent, crappy ass lenders who buy trigger leads from the repositories. So if we pull a hard inquiry and you have not gone through optoutprescreen.com, very important, again, www.optoutprescreen.com. Okay. Register yourself on the do not call registry, all those things. It takes about 5 to 7 days for it to register. We may pull a soft pull up front to look at everything and determine whether you're eligible or not. Okay. Whether you're qualified. Okay. We're going to calculate your income. We're going to verify your assets. We're going to run you through the automated underwriting system. We have 2. Every lender uses the same ones. So don't let them tell you any different, like they have some proprietary thing. They do not. It's all the same. It's a standard. Okay. And we're going to run you through that to see if we get an approval. Okay. And even if we don't get an approval, doesn't mean you're not qualified. We can do what's called a manual underwrite, where it's more of a forensic process. Okay. The automated system takes some of the detail out of it, so to speak. The manual underwriting process is a little more forensic, right? We're going to verify certain things like, do you have rental income, or do you have rental history? Have you paid a landlord to establish payment shock? Do you have assets after closing? Do you have good credit history, or maybe limited use of consumer debt? Those are all positive things. A lot of lenders get sidetracked and sideways when it comes to manual underwrites, and there are lenders out there who just refuse to do them. We do not. I like them. I think this allows me to flex my muscles and the things that I know. And I promise you this much, the team that I have with my VA underwriter and my staff, there's nobody better. And I can say that with 100% certainty. So, but if you do choose to use someone and it is a manual underwrite, there are things in there, ask the right questions. Okay. Once we get through all of that, we are going to host you and have a 30-minute pre-purchase consult. We're going to walk you through payments. We're going to walk you through closing costs. We're going to walk you through the basics of the loan. We're going to talk about budget. We're going to talk about stretch budget. We're going to talk about appreciation. We're going to talk about rates, all of those things to make sure that you are crystal clear on what you are about to step off into. Okay. This is vitally important. We are going to send you a 12-page PDF. We like to call it the pre-purchase packet. We're going to send you that so you can have all these things in black and white. If you owe us any documents, you'll see appreciation rates for the zip code that you're buying in to give you local data. We're going to give you all of the perks, our follow-up process that we go through after closing, because it's just as important as the closing. Okay. And once you close, we are going to seal the deal, pop the champagne, throw a party, but we're also going to follow up with you after closing. Okay, we have a follow-up process. We're going to check in about a week after. We're going to check in when your first payment's due. We're going to check in at 6 months when it's time to be able to be eligible to do the interest rate refinance reduction loan that we talked about earlier, because you're going to get bombarded with crap. And then we're going to do an annual mortgage review, the anniversary, 12 months after you close, just to reconnect. Has anything changed? Do we need to connect you with financial planners? Have you retired? Do we need to connect? My job is to help create connections for you. Okay. So we're going to talk about all those things. And if nothing's changed, we're good to go. Quick 15 minutes and we are out of your hair. Okay. But the best thing about dealing with the best loan officers in this industry is they're going to structure your loan and your closing costs that are most advantageous to you. And they're going to explain it to you. They're going to explain everything to you. They're going to provide you with data and fee sheets and total cost analysis and things like that. So you can see what it's like to buy a home. There are lenders out there, and I had this just yesterday. The lender says, well, I can't provide you with a fee sheet till you go under contract. That is when the BS alarm starts to go crazy. That is such nonsense. Anybody who does that is trying to hide something from you, or they're incompetent. Both are bad. Okay? So we're going to show you these things. We're going to talk about locking in your interest rate once you go under contract, because rates fluctuate day in, day out. It's like this emotional roller coaster that we are on all the time. And we're going to talk about rates. We're going to give you options with rates. We're going to talk about buy downs and temporary buy downs and all these things. We're going to eliminate things. I'm not here to tell you what to do. I'm here to be your tour guide. We're going to talk about your risk tolerances. Some people are gamblers when it comes to rates. They may wait till the inflation data comes out to see if we get some gains. That's on them. Great. But we're going to tell them the consequences of doing so if the market shifts. Right? We're going to have these rate conversations. I get asked all the time, Jason, what's the rate today? What rate do you want? I can give you anything. Well, okay. Well, this person's quoting me X. Okay. What are the fees involved? I have no idea. Okay. So you're buying the largest asset you're ever going to incur and the biggest debt you're ever going to incur in your lifetime. And you have no idea what it's going to cost you. You are not buying a Chevy at a Chevy dealership. This is a home. This is an asset that's appreciating. If your loan officers that you're dealing with are not setting you down and walking you through this stuff, find somebody else. They are doing you a disservice. I promise you that. Okay? We're going to walk you through those closing costs. Part of that is title and escrow fees. That's what they charge. The title company charges the attorneys to consummate a mortgage in your particular state. Okay? Prepaids, insurance, taxes, those are all prepaid costs. They're prepaid through the loan. Okay. You're going to have an appraisal. The VA controls the appraisal cost. We do not. Well, I've seen lenders try to charge over what the VA charges. That is illegal. You cannot do that. Okay. We're going to charge you a credit report fee. That's what they are. Lender fees if applicable. Okay. There are situations that I have waived my lender fees because somebody was short on cash. Look, I am here to help you. I'm your partner in this, not your adversary. I'm not, I can't do that. There are lenders out there who will do it. I do not. These loans, again, are different for everybody, and we're in different shades of everything. And we need to be adaptable. Okay. So if people are cash strapped, hey, I'm here to help you. I'm here to close loans, make you a homeowner, and help you. Okay. So we get asked about closing time. The VA, some lenders are in the 40 to 50-day range. We are not. It's 30 days or sooner. Okay. 30 days or sooner. Our average close time on my team is about 24 business days. Okay. My standard, and I work to standards, the girls know that, is that I like to have these loans processed outside of title and appraisal in 7 business days. We do that about 96% of the time. I do not want you waiting on me or my team or anything that we're doing to put you in jeopardy. If I need to close it sooner, let's have that conversation. If 20 days, 17 days gets the deal done, we will hit the gas pedal and we're going to make this thing happen. But that requires buy-in from you and the agents and clear and concise communication between all of us. Otherwise, it does not work. Okay. We will go as fast as we need to. I closed a VA loan in 9 days for a military family. You can do it, but the standard turn time is about 30 days or less. And don't let anybody tell you any different. Okay. So the biggest question, what are you going to do next? Are you going to reach out, have conversations, have consultations? I'm here to help you guys. Are you going to start thinking about what it's like to be a homeowner, especially if you're active duty and you're watching this, or you're a veteran who's never owned a home, that you thought you couldn't own a home because your credit was not the greatest or something like that? Are we going to talk about what it's like to build equity and show you and put you on a plan to, number one, allow you to own a piece of this country? Number two, use a benefit that you rightfully earned through blood, sweat, and tears. And number three, build equity through your own asset and stop paying a landlord or stop convincing yourself that you cannot purchase from all these things you've been told or you tell yourself. It's time to make changes. Time to make changes. But what we are here to do is answer any questions that you have. Okay. You can get in touch with us. We'll have a consultation. You can send us emails. You can send up smoke signals. We're going to make that happen for you. Okay. Me or a member of my team will be here at all times to help you through this. Okay. All across the country. Okay. The gift that I told you about, I created what I like to call the VA Field Manual. Okay. The VA Field Manual is an unbiased look at your benefit. Okay. Information directly from the VA. Okay. I'm going to send everybody who attends today a digital copy. I also have physical copies. So if you'd like one of those, if you're old school like my old man, you're going to want something to put your hands on. I have those too. I can mail you one. But read it. Go through it. There's so much good information in there, and it's a consumer format. It's not the VA handbook. A lot of lenders will say, oh, well, you need to go read the 26-7. Yeah, that's for lenders. That's a lot of lender speak. This is for consumers. This is for you. This is for you, by you. It even talks about, loans on there through the VA for Native Americans that the VA does, right? There's resources in there talking about the VASP program. So if a veteran gets behind on their mortgage, the VA has what's called the VASP program, and they will basically buy the loan from the servicer, reduce the interest rate to 2.5% to allow that veteran to stay in the home. It's a phenomenal product. Okay. John Bell III, who's the director of loan guarantee, who what I believe is the only director of LGY that has mortgage experience. John was in the mortgage business. So you have the right guy on your side. You have us as advocates on your side. So what do we do next? Okay. This is what I recommend. Everybody in attendance, you can go scan this QR code, schedule some time on my calendar. You can go to www.vabosshomeloans.com and look around. Lots of resources, videos, some downloads on there, but there's also my calendar link on that. There's application links on that. There's all kinds of things. Okay. You can contact me through there. You can contact me here. And I will certainly get in touch with you. I'm going to try to reach out individually to all of you who attend based on the contact information you put in when you registered for this webinar, and get to know you a little bit. And this is not some creepy weirdo thing. And I'm not like that. What I want to do is make sure that I'm providing maximum value to the things that I know that can help you get out of your own way, become a homeowner, start building equity, and truly maximize a benefit that you earned. And that's what excites me. So I appreciate all of you for spending an hour with me today. I appreciate all of your service. I thank you for that. My family thanks you for the umbrella of freedom that you provide us. And I look forward to serving you and your family in the future. And I will promise you this, that I will be the best advocate for your benefit, your family, and what you've done than anybody else. That's my commitment to you. Thank you for coming. Look forward to talking to you. We'll see you soon.